AM 1170. The Answer.
Welcome back. Welcome back. You are listening to Whissel Wednesdays here on AM 1170, The Answer. I am Kyle Whissel, your host with Whissel Realty. Before the break, we were talking with Brock VandenBerg, TaliMar Financial, hard money lender here in San Diego. If you have hard money questions, deal hunting questions, give us a call. Shoot us a text, 619-663-SELL, 619-663-7355. So, Jason, just to set you up for success here, Brock, what's the typical interest rate on one of these hard money loans?
You're looking at about 10 to 12% on an interest rate for a hard money loan.
All right, Jason, what's the typical interest rate on your loans right now?
You know, somewhere in the mid to high threes, and if I tell somebody 4%, they get upset. I can't imagine saying 10 to 12. But doing this for as long as I have, I remember when the rates went to 9 7/8, and we were so excited. Like to get them under double digits for a conventional 30-year.
Oh yeah,
was amazing. Back in the 80s,
back before we were alive.
Yeah, almost before you guys were alive. Anyways, and that was nice. So here's kind of what's going on. We've seen a couple months of rates very calm, and that's kept the rates very low. But now, this past week, we've seen a lot of volatility in the mortgage-backed securities and the bond market because there's whispering now that, hey, the Fed has to raise rates eventually. They've only raised one time in the last 8-9 years. And the fact that they even talked about it, we saw the stock market lose like 300-400 points in one day. I mean, it's down quite a bit in the past week. Typically, that helps interest rates when stock markets fall. But right now, everybody's pulling their money out of the stock market and out of the mortgage and bond market, which is actually causing rates to lift up a little bit, which I urge everybody to get ready. There's going to be another opportunity where the rates probably drop a little bit, and it might be the last time, right? And so I think in the next 3 or 4 months, you're going to see a good rate cycle where you can get a nice low rate in the low to mid threes and be happy with that rate. Try to get it at no cost if you can. But rates can't stay super low forever, right? There's going to be something that happens, and no one knows exactly what big next thing is going to happen that's going to cause everything. We know the Fed has to look at raising rates because it's been so low so long that if the economy does fall into recession, which some people believe it's happening, they don't have a whole lot of tools in their toolbox to help that, right? So that's one of the reasons why everybody's telling them, look, you guys got to get a little bit ahead of the game here. And so we'll see what happens.
Because that's how we ended up with rates as low as they are right now is when, the market was tanking, they kept lowering interest rates until they finally hit a number that got people off their ass and started buying again. But the problem is now we're kind of, supported on this stimulus stilts of a low interest rate to where if the economy starts to tank again, there's not really any room to go down. I mean, the Fed funds rate is 0.25%?
0.25%.
Is it 0.25%? I mean, you cannot go below zero.
We didn't think you could go below, but other countries in this world are going below. They're going negative rates, which is why a lot of that money has flowed here to the United States this past year and actually drove our rates so low. But you're exactly that. A lot of businesses, a lot of real estate, a lot of stuff has been inflated because we've had such a low interest rate. Everybody's got just used to 3-4% rates, right? They're just used to that. They can't imagine rates being 5-6%. And that's historically was the low. I remember when 6.5 was the bottom, guys. We never saw lower than 6.5. Now, if you tell somebody 4.5, they think you're robbing, right? So I think that's why the markets are really volatile right now. The fact that the Fed might raise rates, oh my God, what's going to happen? Reality is it's not going to kill anything as long as they don't overdo it. But it is something that I think all of us are concerned that we just can't sit there and expect the government to keep us afloat forever. Right. We just can't. Something has to change. And there might be some big change, whether it's Hillary or Trump that gets in, and maybe they do something that's great, but maybe at first it's looked at negatively, and we might see some rates and stuff cycle on that. But that's what makes all of our careers here interesting. That's what makes you interesting in what you do. And that's what we need to figure out. So do this. Don't wait and say, oh man, Kyle and Jason and Brock told me to buy when rates were in the mid threes, and now it's 4.25, and that same mortgage, $500,000 like we're talking about, now it's all of a sudden $80, $100 more a month. And you think $80, $100 doesn't make a difference, but we're also seeing gas at low prices.
$20,000 in affordability.
It's $20,000 in affordability.
Mm-hmm. So, right. So again, if you want to connect with Jason, find out what your rate would be today on a mortgage. give us a call, shoot us a text, 619-663-SELL, 619-663-7355. So Jason, as rates have either been lowering or hovering at historically low levels over the last 5 to 10 years, something else has been increasing and hitting historic highs over the last 5 years. What is that?
Values, right?
And another thing.
Okay, what are we looking at?
Rents.
Oh, you're right. Rents. Because of values, too.
Rents are astronomical right now.
Rents haven't slowed down at all. We've seen real estate accelerate, slow, accelerate. But you're absolutely right. Rents have not slowed down at all. They've been accelerating at crazy paces.
Yeah, I mean, I used to live in a apartment across the way here in Costa Verde. And I believe when I rented there, when I was going to college, it was $900 a month. And that same apartment is almost $2,000 today. Which is
it's like 600
phenomenal.
square feet or whatever.
Yeah, I mean, tiny with like 2 windows on the entire thing. It's a jail cell.
And you start even looking at the home ownership rates. I don't know if you've seen some of those rates coming out now. Now we're historic lows at 50%. And I think you're seeing a lot of these millennials coming in and trying to buy homes, but the values are just too high right now. So, but I do think there's an opportunity, and I think it's a great long-term investment to be purchasing a home.
Absolutely.
Here in San Diego.
You got to live somewhere. You got to have you need to have a tax deduction, assuming you're making money, right? You need to have that tax deduction. You need a place to live. And it makes all the sense.
Yeah.
You look at any successful person, 99% of them have some type of their money asset in real estate.
It's
like 99+%.
It's a great long-term savings tool. When you're buying down the principal in that house, it's a great long-term savings tool.
Yeah. I mean, think about this. If I owned, let's say whoever owned that apartment that I lived in when I was in college, that was 12, 13 years ago, whoever owned that, when they owned that property at that point in time, they were collecting $900 a month in rent for that apartment. Odds are they had a loan on that property that is fixed for 30 years.
Right. So they were probably making no money on it, or maybe $100.
The beautiful thing for the owner of that apartment is they are now bringing in twice as much money. So they're making twice as much money, in their return on investment. In addition, the value of that property has since easily doubled during that time. Do you want to be on that end of the equation, or do you want to be the one bitching and moaning that rent that used to be $900 is now $2,000?
And as you mentioned,
you have a choice.
There may not be a mortgage left.
It may not be. They may have paid it off,
or it's getting close to paid off. So you go from having a positive cash flow of X, and then it's plus the mortgage payment. So you might be talking $2,000 net positive cash flow that when you bought this property 15 years ago, maybe you're only making $100.
And what is that? That's your retirement income.
Absolutely.
Yeah, so we have such an amazing time right now to invest in property, whether you're looking to invest with Brock and fix and flip something, or you're looking to invest with Jason, buy a property, hold on to it for the rest of your life. I mean, we had Dave Elhoff, a financial advisor in here, who talked about, why do a 529 plan for your kid's college? Why not buy a condo today? Because when your kid is 18 years older and going to college, rate or values have traditionally gone up 5% per year in San Diego since the beginning of time. So you do 18 years of 5% appreciation compounded annually. Right. I mean, you're literally talking a
great
double
argument.
The value. I mean, that is a phenomenal investment. And the best part is rents are going to continue to go up. So the amount of money you're making off of that rental every year increases. But what doesn't increase is your payment. Your payment is the same the entire time. And if you put a little extra money into it at the end of those 20 or 18 years, you could have that thing paid off. I mean, why put the money into a 529 plan when you could just go buy and invest in a condo for your kid?
Totally agree, Kyle.
And maybe it's paid off at that time, and then your kid lives in that condo. I mean, think about that. And then you don't have to pay those crazy rents, like buy the condo over here near your CSD. And
well, my kids wish I'd let them live in a condo.
You wish you would have bought them a condo to live in, so they don't have to live with you.
Well, they don't live with me right now, but they'll be back. To come back. They'll be back, right? But kids nowadays, they want everything.
I love it. So if you're interested in investing, buying and holding, buying and flipping, we'd love to be that resource to help make that happen for you. Give us a call, shoot us a text, 619-663-SELL, 619-663-7355. Brock, thank you so much for joining us. Any parting words?
Kyle, thanks again for having me on here. There's always opportunity in the real estate market. Go out, network, find the right people, partner with them, and definitely jump into it.
I love it. Jason, anything parting words?
Work with an agent and a lender who people actually know in San Diego. If you Google your lender and agent, they don't know you, you got the wrong agent and lender.
I love it. 619-663-7355. 619-663-SELL. Thank you so much for joining us on this episode of Whissel Wednesdays. Talk to you next Wednesday.
Can you blow my whistle?